Hello everyone, this is Jeb Hanwiger from goldstocktrades.com. Today's February 27th, 2012, Monday, about 4:30 in the morning, and I wanted to update my readers on some important developments that we're witnessing in the precious metals markets and the foreign exchange markets with the euro and the dollar. We have seen a short squeeze occurring with the euro. Many investors reached a record short position in early January, and that is putting some pressure on the dollar. Remember, the dollar benefited from this week the euro crisis, as many investors fled the euro, and the dollar was appeared to be a liquid asset, and appeared to be stronger than the euro, and this counter trend rally in the dollar affected some of our precious metal holdings and industrial metals, and we're seeing this current volatility, that we had some short-term volatility and a very long-term uptrend, and this will occur at times. We maintained our faith in precious metals and hard assets and wealth in the earth assets despite this correction, and we have seen a powerful rebound since our October 4th buy signal in oil. Oil is almost challenging the pre-2011 correction highs, and we believe that's going to occur with silver as well. Silver's just broken a major multi-month downtrend on strong volume past the $35 mark, and we think, just like how oil is challenging its pre-2011 crisis, 2011 debt crisis highs, we think that silver is also going to challenge that $50 mark, and gold is going to break through the $1,900 mark. Well, if we see a good breakout at $1,900, we could see another run higher into new highs, which is highly probable that we could see a move to gold to $2,300 this year, and possibly a move to $70 silver by the end of the year. And this is, if we see a similar path of what we saw in 2010 after QE2, this would not be such a far reach prediction. Copper is challenging the $4 mark. I think the $4 will be a crucial breakout for it, and then once we see copper go through the $4 mark, it will also challenge those pre-credit crisis highs at 450. So once we see a move from 450, it could easily then break through to the $6 mark. So this is what we're seeing. Investors are realizing that central bankers are continuing to print U.S. dollars, yen, and euros to try to prevent an economic crisis, and this is benefiting the hard assets, gold, silver, copper, oil, and which is affecting our uranium and rare earth investments, where we're seeing increased demand for these assets, and the central bankers are continuing to choose to print money and to prop up the equity markets through inflation. And the people that are losing out right now are many of those investors who have fled the long-term uptrends in commodities and natural resources and fled to the dollar and the treasuries, and where it reached levels that were completely irrational, and created an excellent buying opportunity for gold and silver. Silver had a great opportunity here in the low 30 area, and in gold we had a chance to buy it below 1600. So stay tuned to goldstocktrades.com and have a great day.